evening, and it is always a pleasure once again to interact with you. Indeed, the policy, legal, regulatory framework for green investment has come a long way, and we believe now it is at a stage where we are very, very ready and prepared to incentivize you to come and partner with us to enable the other 49% of the Ugandans who don't have access to clean energy, to have access to clean energy, and also the other 51% to qualify. They are using energy but not for cooking. So we want to bilateral walk-through offices asking for meet who, see who. You know, it is not negotiable. You know, it is over there. You are able to view it over the globe and to know if I go to Uganda, if the project is this capacity, I should be able to make new energy feed-in tariffs and make my calculations to see whether my dream is technically feasible but also financially viable. Of course, I need to qualify that there are some technologies that they were moving at a pace ahead of us, like solar in the recent refit phase 4. We did not announce a tariff for solar, and therefore this we are looking at competitively, that is grid connected solar, competitively tendering out so that the country's population can get its worth. I mean, if its worth is 20 cents, 40 cents, 30 cents, it's a transparent way of bringing the population on board to know that while the worth of a kilowatt of solar in Saudi Arabia may be 1 cent, from competitive international bidding, the worth of me as a Ugandan, I mean, given the investment climate, given the regulatory framework, given the perceived risk, this is the worth. So we looked at that, because the technology was moving fast-paced, but also we have a very small grid. We really have a very small grid, and we are very sensitive to that. We have a peak demand of 723, so most grid-connected solar projects that make favorable tariffs benefit from economies of scale. So for this grid of ours, you only inject in above 50, 70 megawatts, and you don't manage it well, and you'll be collapsing in blackouts. So that is another thing that we looked at, and we said, so let's package projects in a way that, one, enables the population to benefit from the technological advancement, but also a competitive, transparently determined price, but also be able to ensure that we retain grid stability. The other one is we have developed an interconnection code. So when you are doing your feasibility study, it is very transparent. You'll know what it takes for us to allow you to connect to the Ugandan grid, to feed in, and those estimates you can have them very clear. But also this interconnection code allows for government entry, especially where the interconnection to evacuate the power is more than 5 kilometers, and the decision is that we need that power because the generation is site specific, we cannot move it, so government comes in to support. There are tax exemptions on hydro and solar equipment. Of course, we are very cognizant. Those that have other forms of usage within the country where issues of road land practice, those ones we don't put waivers, but for equipment that we are sure that it is a panel, it can only do this, either in an established infrastructure, off-grid, mini-grid, or even if it's on a rooftop, it is only doing one work, it's generating power. It cannot be used for beds or any other. So those ones benefit. It is a turbine, they benefit. Then we also now have a wheeling framework for power evacuation. And this framework is to allocate risks where they can be better managed. Because the generator is not in charge of evacuation. If he's not in charge of the grid, he should not be penalized for failure of the transmitter or the person who is evacuating, the distributor, for failure of them to do their work. Then of course the other one, government provides financial support in various areas through entering into an implementation agreement with government, depending on the objective and the initiative we are trying to address. Thank you very much.
Okay, thank you very much. That's from the regulatory sector, and we'll get back and ask you some questions. So we have wheeling now. We do have wheeling. Do we have net metering on the way? Let me just.
Yes, metering is the way.
Net metering and wheeling are both on the way. This is great.
Wheeling is already existing.
It's already existing. That's your time. Just ended there. Okay. So next we like to move into the banking sector, and finance is becoming more and more important, considering the expansion in the on and off-grid sectors. So we have Brian. I'm really bad on the second names here. Brian Tahim Duka, who's the head of power and infrastructure and telecoms at Stanbic. So giving examples, we want to find out, over the past few years, investment in energy in East Africa has changed greatly. Previously, most electricity investments were in projects based on power purchase agreements for generation equipment supplying power to the grid. Now well over $1 billion flows each year into African off-grid players that focus on energy access in rural areas, using off-grid solar solutions and mini-grids. How is the banking sector adjusting to this change? What are the opportunities and obstacles you see in the changing investment climate for green power? And where will Stanbic's focus be?
Thank you. Thank you very much. So let me use this. So for the benefit of just members who might not know who Stanbic is or who we are as a bank, I'll just take 1 minute, then I can go to the opportunities and continue. So Stanbic Bank Uganda is a member of the Standard Bank Group, which is an African bank headquartered in South Africa. And this is a business that has been established for over 150 years. Now, from a banking perspective, on the African market, we are in 23 geographies. And I'm telling you this so that as you think about expansion, as you think about investment into Africa, think around which bank can be able to support you, because a right financial partner will be able to work with you across geographies and support you. Then from a Ghana perspective, if I bring it home, we are in 74 branches. Those are physical infrastructure. Then we have over 1,500 agents. That's the kind of financial support you can have from a payments and transaction perspective. Then of course, talking about our digital capability and many others. So coming home to the question, let's talk about where we see the opportunity. So we have seen, from a legislation perspective, we have seen evolution from the grid, the hydropower and grid generation. Then we gone into renewable energy, and we're seeing a lot of opportunities in the renewable energy space. So, and when you talk about renewable energy, we're talking about the pay-go space, where you have the solar home system, the single component based. Then we are seeing a lot of opportunities from the mini-grid perspective, where you have scattered or clustered far from the grid population or settlements, and this is a great opportunity to invest in. Then we're seeing a lot of opportunity in the waste-to-energy space, whereby you have a lot of agricultural waste, or the cities waste they're talking about, which you can actually take advantage and put up a grid and actually generate power and make money. Then also we're seeing a lot of opportunities in the energy efficiency space. That's where she was speaking about the project that talks about the charcoal to power. Then you have a lot of briquettes, you have a lot, so there's a lot, and we're seeing a lot of legislation in that space. We're seeing even the international players come in, like the UNHCR, as they focus on the refugees with clean cooking, with briquettes and all that. So that's the direction. But while there's that direction from a renewable energy, off-grid and that space, we again see a lot of opportunity on a grid densification and intensification. Because as more power comes on board and there is increased generation, there has to be increased expansion of the grid. So there's that opportunity. And even where there is existing grid and where the grid is growing, Patrick talked about the 3.2% fertility rate for Uganda. So that means where the grid passed a week ago, there will be a baby or two who are born that night. So that means there will be another settlement in the neighborhood which will need a new connection. So that's another opportunity. Then government of Uganda's strategy on industrialization, on manufacturing, agro-processing, and the minister spoke about the 24 industrial parks. There is opportunity for extension of the substations because they need power. And of course, in those needs, there is also creating the right mix from hydro to many other sources. So when you talk about opportunities, when you look at the whole electricity space, there is a lot of opportunity in that from a government perspective, even from a private sector perspective. And as a bank, what we've done is to say, wherever you fall, we will be able to support. And looking at the public sector, as a bank, we've seen a lot of transactions coming in on EPC plus finance, and as a bank, we are coming in to support that also. Then we're seeing a lot of private players who are looking for CapEx, where you need direct balance sheet lending, and you need to actually build up and develop these projects. We're coming to support all that. Then, of course, the sector is, some of the components of the sector, all these opportunities are looked at as high risk, high return. So we are seeing a lot of what we call risk management instruments that are coming into the sector to help de-risk commercial banks and provide opportunity to be able to underwrite these deals. And I'll give an example of, we have a risk document, a risk sharing guarantee with the Swedish International Development Agency for Renewable Energy, which focuses on all waste to energy, grid extension, EPC contractors, and also energy efficiency. And what it does, it provides some cushion to us as a bank as we focus on lending to these projects. So those are the kinds of mitigants that are happening in the sector to make it more attractive, to create more opportunities, create more investments, and also be able to support government as they focus on their scaling and also electrification access rates.
Are you done?
I'm good.
Good. What would you say are some of your biggest investments in the energy sector in Uganda or in the region?
So, not going in naming, I'll speak about a transaction we did of around $50 million, where it was a transaction for the region, and we have different lenders in the transaction. So that's one of the things actually I forgot to talk about, the syndicated transactions, where we are. Okay, I'll use my voice and try and project. Okay, thank you. So one of the ways also to actually, as commercial banks come strong and support the sector, of course the interest rates are high and all that, we are seeing international development agencies coming in with different instruments on deals where we actually come together as a team and lend to a transaction. And you'll see some will come in with low-cost debt, others will come in with instruments that actually mitigate the cost of on interest rates, and we are able to actually lend to these projects. The last component I'll talk about is the non-financial. So as a bank, we have what we call the Stanbic Bank Incubator, which is a fully fledged established foundation. And right right now we have the first ever energy cohort. Now, this energy cohort, what we do, we focus on accelerating SMEs or medium and enterprises and take them through trainings and expertise and equip them with skills they need to survive in the market. And that speaks about looking for jobs in terms of bidding process, talk about governance, talk about human resource, talk about administrative work. All the whole spectrum is captured in the whole training. So, and what we're trying to do is to say, how do we prepare these SMEs to be investor ready? Before, we've been having challenges where they ask businesses to do business plans and they are not adequate. They talk about financials and bookkeeping. Do that because the energy space has a lot of entrepreneurs, but again, they never go to school where they teach entrepreneurship. So again, what we're trying to do is to say, how do we bring that closer to the market and equip them to be investor ready, to be commercial debt ready, and we'll be able to support. Then the last bit also we do as a bank, from a CSR perspective, we support businesses with financial literacy. So if you have a project out there and you're looking at how you connect to the communities, or you're looking on how do you grow your electricity load, consumption load, we can support you with that, the financial literacy for communities. And also, the sector or the power and infrastructure sector doesn't work in isolation. We deal with the others like the agribusiness. That's where the agri-waste comes from, and see how do we support a value chain of farmers as we walk through the whole ecosystem to the end.
Thank you, thank you. So the last panelist is last but not least is Peter Nico of Mandalas Energy. So Peter has been building a business that works on agricultural waste in the north, around Gulu, and I'll let him tell you about it. So the question for Peter is, what are some of the main opportunities that businesses have in green energy in Uganda, and what do you see as the key barriers that slow progress? Please explain, giving your own experience as an example. What does the private sector need from government and investors to move forward?
Thank you very much, Mark, and thank you, colleagues. Good to see you all this afternoon. So, as Mark mentioned, I'm CEO of Mantis Energy. So we're developing a few projects in northern Uganda and parts of western Uganda. So our projects are mostly waste to energy, so agricultural residues transformed to electricity and transformed to clean cooking fuel. So we're doing our work in Noya district, where we're generating electricity to power agriculture processing, and we're also generating electricity to power agricultural processing waste transformation into clean cooking briquettes. We're hoping to move into scaling up this. In the coming year we'll be doing solar PV and battery storage and hybrid with biomass, and scaling up from 32 kilowatts to about half a megawatt, and hopefully thereafter go into the mini grid space. So in general, there's so many opportunities in Uganda. As colleagues said earlier, and there's close to 15 million people in Uganda now, and based on the latest information, around half of them don't have access to electricity yet. So that's a huge opportunity. If you think about it, 25 million people or so, that's a lot of families. That's a lot of connections, and so it gives you opportunities everywhere from mini grids to connect to the grid directly, to off-grid solar home solutions, and so on and so forth. But also the fact that way over 3/4 of the country uses unsustainable woody biomass as a form of energy, both for rural use as well as in the city, and also on the urban side, generating heat for cooking and heat for industry. So that's another huge opportunity there, because turning that green, whether we use up the extra gigawatt of electricity which is coming on board onto the grid, and then use that for clean cooking and heating for industries and households, whether we, do more cold storage, as the panelists said early in the morning, to help, reduce the amount of agricultural produce that is lost post-harvest. The opportunities are very, very, very many. So what we basically have in the renewable energy industry out here, especially on the entrepreneurial side, is there are a few players. I see a few colleagues here. I see Equatorial Power, I see Pamoja Energy, and we're all trying, to make a mark and keep things moving. I believe we would all appreciate, a lot more support as we do so, from the different angles. Looking at it, more support obviously on the financing side. The cost of financing in Uganda is obviously higher than it is elsewhere. From our standpoint as Mandalas, we've raised our financing mostly from overseas. It's not been easy to raise financing in country for renewable energy projects because it's a growing industry, renewable energy financing on the private sector side. In terms of the regulatory side, actually it's been encouraging, and there's so many opportunities out there. Obviously, I know a few of my colleagues in the room have got mini grids, that have been connected. Others are just about to connect and so on. And there is a system through ERA, to get an exemption from the long process that you'd get for the grid. And there's more legislation I know which is ongoing, which will make it even easier for us in the sector. But what it comes down to is we understand it's very new and it's very young, and we've got to spend a lot of time focusing on innovation to figure out how to make it all come together. On our side, we've looked at multiple ways to innovating around the business model. First of all, knowing that it will definitely take a while to go through the regulatory process, we've looked at tweaking the business model so that it's based on productive use and based on generating, energy for self-use for agricultural processing. We've looked at energy not just as electricity but also as clean cooking fuel, and looked at how we can use more of our energy that we produce as electricity to generate clean cooking briquettes, which has a significant impact on reducing the amount of firewood which is being cut. And that has also helped us with regards to financing, because we've got our own carbon offset platform in Silicon Valley called Project REN, and that's our own kind of in-house subsidy mechanism, if you may. It's not easy winning the open bids out there because you'll have bigger companies, obviously, who have better bank balances and more experience. But in the end, the only way we can deliver energy off-grid, because if I am delivering energy for agriculture processing in Noya district or in Kiriandongo or in Kamwenge, and I know that in Kampala my competitors are paying only 13 cents per kilowatt hour to Meme, or 8 cents if they're much larger. I've got to figure out how can I bring down my tariff to somewhere close to that off-grid. Obviously, it's not easy to get a subsidy for that, so we've got to have our own in-house subsidy mechanism, and that's what we do by having our own carbon credit platform. We do spend a bit of money, to get our projects, certified, to do further feasibility studies to figure out what exactly works. But it does make a difference, and going for technologies that give rise to further waste that can be valorized, such as biochar, which has a value as a coal replacement, all that counts. And ultimately, when we can give ourselves, electricity at prices below 20 cents per kilowatt hour, on average, sometimes getting much lower, then we find that we're able to create a business model that might not be straightforward and might not be traditional, but actually works, and and leads to growth, and leads to revenues, and leads to getting us closer to being commercial lending ready, which is where we are now.
So, thank you. So my question on that is, so maybe what I'm hearing, you want to get into cooking, supplying cooking fuels. You want to supply productive use. So maybe we're getting away from the model of off-grid electrification, which we were thinking about 15 years ago, is let's count how many houses we connect and let's see how much we charge them. And instead of that, we run a business which actually which adds value to the community, which processes crops, or which produces a fuel, or which supplies a washing machine, or even does transport. Is that where you're headed?
That's exactly where we're headed. Because ultimately, when we head that way, we help everyone out. You know, we're able to make it more interesting to add value to produce off grid. You know, for us it's agriculture. For our colleagues on the islands, it might be, you know, ice and cold storage. But what it means is you turn your villages from those who are only receiving aid from the government to those who are actually becoming taxpayers, because they're adding value to their product, they're growing their economies, and it benefits the whole country a lot more than us getting maybe all of them connected. And finally, this enables us to finally, you know, when we do start supplying electricity off-grid to a mini-grid, we would then be able to do so at the tariffs that the ERA would advise without need for additional subsidies. So the kind of changing that business model enables that in the long run.
Okay, thanks. So we've heard from the regulatory side. We've heard from a banking side. We've heard from a business side. We like to open it up for the second half or the last third of the discussion, just for people that would have a question. Do you need someone to use this microphone? Well, I'll walk out with a microphone. So I see a hand here.
Thank you. I'm Riccardo Ridolfi with Equatorial Power. A comment and two questions. So first of all, Peter, congrats. That's amazing work. We all know how tough it is in the space. I will say something, although we agree, and we're doing exactly the same business model innovation that you just described, the huge difficulty we have is with the likes of the gentleman next to you, right? And I'm just picking on Brian to use the example of finance, right? Finance is the most conservative sector on earth. And if it's already difficult to convince financiers internationally, let alone in Uganda, to back mini-grids, try convince them to back a mini-grid that now also produces clean cooking briquettes, does transport, does this, does that. It's almost impossible. All right, that's the truth. So we have to, ultimately we have to ask ourselves, do we want to accelerate access to energy or not? Because we can continue to innovate, solar panels and batteries will continue to drop, and in 20 years' time, we'll have a much better solution than we have today. So do we want to accelerate access, or do we want to continue to do our best for that 1% that will get whatever? Because Peter is also a champion grant writer, as I am, as Pamoja is, and that's how our businesses are still alive. If we didn't have that, we would not be surviving. Okay, so, and that, you know, makes one reflect, because we have partnered with ENGIE, which is the largest power producer on earth for Uganda over the next 5 years. They're willing to invest a lot of money. Yet in 2 years, we still have not deployed the first mini-grid for many reasons. But the point, it ultimately comes down to a quickly replicable business model and a match between a subsidy and tariff. And so to my quick questions. To Brian, that's the sort of shorter one, is I commend what Stanbig's trying to do. I mean, we see your face all the time at these conferences, so we hope to see your money soon. But out of all the different facilities that you can put up, working capital is something that's useful to us, but it's almost unavailable without security. Corporate debt is not that useful to us because we could get that cheaper elsewhere. Equity would be useful, you don't seem to do it. And project finance debt would be great, but you guys don't do it. So in energy, as a, you know, project finance makes a difference. If we have to leverage ourselves at the corporate level, that's a nightmare. So maybe speak to that on when you see that to be a reality. And then on the regulatory side, Madam Ziria, we appreciate ERA very, very much. We're also active in Rwanda and DRC, and so we appreciate ERA even more. The query we have is as to rumors or policy. We were at a conference last week where Umeme launched a pilot project with off-grid operators, and the government spoke out to the fact that they want the tariff to be capped at 30 cents. Now, we know that ERA has been operating very well on setting a cost-reflective tariff, which is what you just repeated today, and it is true. In our experience, it's true. Now, what happens when, in order to get that tariff, we would need more subsidies which are now not available? And so the question is REA going to follow that government policy and therefore subsidize so that we can meet that tariff? Or is ERA going to go over that policy because the law says that you can and allow us to charge higher? Or are we just going to wait more years to accelerate access? And I'm being provocative because it's late and we want to have fun. Thank you.
Okay, thank you very much. Maybe I will go first and then we will continue with the responses. I want to clarify that actually the capping of the tariff at 30 cents was a policy of the authority. It wasn't government. I want to own up on this. And it intended to introduce transparency in what we see as the impingements to the massive rollout. I can share an example. Today I shared the new number of access to clean energy is now at 51%. But what happened? I mean, as you are struggling with your grid, as you are struggling with your setting your price, these consumers will walk away from you and they will go to what they perceive as fair, as reliable, as affordable, as realistic. So a regulated market where there is need for de-risking the project to make it bankable is a bit different from a deregularized market where you come in with your project and take on all the risks. So as long as we are targeting the same population, incidentally this 49% of the population, you have pockets of those who are suffering from intensification and densification, but the majority of them really, we are talking about the lifeline, people who are within the category of lifeline. We are very cognizant that even in these off-grids and mini-grids, you'll have 2 or 3 critical consumers, and the rest really, as we encourage demand-side management, efficient energy usage, they have 1 or 2 bulbs of 3 watts, and really even if you had a number of 1,000 also, it may be difficult. So government, in effort to accelerate access to clean energy, for the people on the grid, they are saying we connect you. If you need a connection for no pole or 1 pole, government is incurring the cost either through support from the development partner or from the treasury. So equally, the other side, you cannot leave Andamant and believe that the other side, which is the same population of this country, for it would be paying 40, 30 cents and they don't have incentive. So this is an area where government is internalizing. We, as the authority, that is a policy of the authority, and our policies are usually to ensure that we are transparent and encourage a good investment climate. And this policy was well thought, because initially government thought that we can achieve grid parity, where the mini grids which lack economies of scale, which have more demand risks, can be, taken to that level of parity with the greedy consumer. And we said, no, let's try this policy with the possibilities of government subsidizing, and I can say where possible, because the automatic subsidies that all Ugandans should benefit from the free connection. So if part of your 40 cents or 35 cents, there is a cost of connection material, a cost of connecting the customers, we only need to improve on the area of coordination to ensure that as you come up, roll out the grid, REA is also readily available with some contractors who are going to do the connections to be able to offload that consumer from that additional cost, which many times the most privileged Ugandans like me in the state centers are enjoying, because if you have a connection in Atete, Ruzira, where You know, one pole, you are connected for free. You also benefit from the lifeline tariff. So really it is knowing that electricity is not only a commercial good, but it also have a social element of society. And I want to again repeat that this is a policy of the authority, a decision of the authority. It is not a policy of government. Thank you.
Right. So your questions were spot on financing, and what I can say as a bank, we have seen, of course, we've kept ourselves to the market. We've seen a lot of innovation in terms of technology on storage, on generation panels, which has brought the cost of projects a bit lower. Now, what we've done as a bank is also to think around how do we innovate around products we offer to different customers in different sectors. Now, to give an example, from a working capital perspective, we actually provide such short terms, because you remember working capital, you're looking for 12 months, 24 months, max 34, or sometimes a client is looking for 6 months revolving. So such deals, we do structure them and provide them. And there you find yourself with requirement of less capital because it's short-term, revolving, and it's mirrored to the purpose what you're looking for. The other thing we've done is we've looked at vehicle and asset financing. If you're looking at buying some equipment that will help in generation and all that, we can actually use that as a self-securing. The valve will self-secure the funds, and you don't need to find collateral. We've also found scenarios where you can actually use invoice discounting as a tool. And this, if we go away from the renewable energy space and talk about customers that are doing sales and distribution utilities, the likes of Umeme and the other utilities that we have in the market, there are very many projects being implemented by government of Uganda in partnership of development partners. We can actually come in and provide invoice discounting tools and support that working capital requirement. Then the other piece is we are seeing now a lot of demand from centralized and industrial customers. So you will have anchor clients that can actually make a project bankable. In that case, we can actually do direct funding, and you develop the project because there is the mathematics or the numbers, they add up for the project to be bankable. So those are some of the solutions. The last one we've done is, I spoke about it, we've been able to say, let's take a notch higher and look for what we call a risk management tool, which comes in as a guarantee from a AAA rated firm, which is the Swedish International Development Agency from the EU. So it is one of the instruments we use, and we can be able to cushion your debt and lend to you. So, and what we're doing is to say, how do we get as many parties? Because the energy challenge is not commercial banking, because we know there's a lot of grant, we know there's a lot of equity, we know there's a lot happening in terms of how much funds are coming. You've seen the international firms like ENGIE coming in. So what we're doing is to say, how do we play a collaborative role so that if you have a challenge or a project at hand, we can team up and we'll be able to provide the solution required. So that's the kind of solutioning and innovation we put up, even from a financing perspective, to make sure we take care of the needs of the specific players in the specific subsector in the energy space.
All right, we're running out of time, so maybe we've got a few more questions. Anyone else got a question? Let's all right, so we've got 2 questions. Why don't we ask the questions and then we'll answer them a little bit quicker this time.
Thank you. With huge investment in the energy sector, over time, Uganda's electricity rate has moved unsteadily over time. Households' connections are increasing at a decreasing rate. So I would like to know which areas can Uganda focus on to increase the energy access. And the other one, which source of financing for an investment is most appropriate for energy projects without having an impact on the economy? On the government side, I'd like to know the cost of the drivers of cost of energy, For example, is the construction of more large-scale dams a solution to lower electricity tariffs?
Yes, to the regulatory authority. Yeah, recently we picked an interest of, venturing into solar mini grids. And one of the critical issues that came out was if an institution got a mini grid and they had to sell back to the main grid, like, I think the gap, the price gap is really, it's unfriendly, if I could use that word, because it seemed like the cost of electricity, a unit is about 500 shillings, and we got to hear that if a company is selling back, I mean, like, channeling to the main grid, like, they would get about 45 cents. So we actually wanted to get clarity. 45 shillings, sorry. Yes, 45 shillings. And then to the financials, I think there are many grants, yes, that are coming in, but you realize that there is a big need. Many institutions that actually would be venturing into renewable energy are challenged with funding. For those that are trying PEGO for the last mile, especially those that need really renewable energy the most, it's a big challenge. Yes, and for partnerships with a number of financial institutions, there is still that rigidity, like they're stuck to, so we don't know about Stanbic Bank.
Okay, looks like I am in the corner. So I will start with the last question. While there has been and there's still a challenge of access to finance by solar companies, especially companies looking at PEGO, we have seen the challenges around their businesses in terms of their business models, how they run the businesses, business plans, bookkeeping, how much data out there we can find. And PEGO models, the more accurate the data, the more insights they give a financial institution to actually be able to lend to you. And that's why I said, as a bank, through the business incubator, what we've done is to say, how do we pull back and focus on these companies and support them to actually have accurate data, good structure in governance and human resource, financial management and bookkeeping, so that as we walk through the whole journey to the end, we are able, by the time, one of the requirements for graduation is actually a very good business plan. How do we actually get that business plan as a bank and actually finance it? So that's what we've done, and the challenge continues. But from a bank's perspective, from a renewable energy, we've creatively thought around, again, innovate, how do we support these companies? And that's why we have our inventory financing models, we have the receivables-based financing models, and those are supposed to support to see how do we able to make it at least to be able to support them with financing or debt financing. The other question was on which model, where do we see where we can get actually quick numbers in terms of electricity access. So you can argue it out many ways, but when you look at the off-grid number, the people who are far off the grid, there are so many. So, and when you look at something like the PEGO, solar PEGO or component-based, it is a bit scalable. You can push out as much numbers, you can reach as many people as you can. So solar PEGO, again, the off-grid, it could be a very good scalable solution. Then you have, areas where the grid is running or is passing, then you have few people connected. So again, any agenda that is focused on increasing densification and intensification, again, it increases access. So it's a two-way. People who are far off the grid, or the population that is far off the grid, if you look at PEGO and component-based, it is a quick to reach and scale. Then for people who have access on the grid, it is also an easier way to say, how do we actually get them connected as fast as we can, because the cost is a little bit lower, and again, we are seeing a lot of funding in that space from an intensification and densification space. So it's taking advantage of that. Your last question was speaking about the funding in the investment types. So when you talk about investment types, it's more of what's the kind of project and at what stage is it. If you're looking at a mini grid, you're looking for long-term project financing debt. But again, do the numbers, if you do a financial model and you look at the tariff, you look at the population, you look at their income, you look at how much can you get from investing such, that will determine, are you looking for much more long-term debt or short-term. If you're looking for, if you are into the solar PEGO, you look around what's your the receivables book, how long do you take to turn around your book and be able to collect all the money. Some companies sell cash, other companies take 24 months, other take 34, so 36 months. So it's again, you look at different businesses and you look at their different needs. Then you find customers who are into the waste to energy investing into equipment. Well, there you can do a VAF and you actually be able to do at 24 to again 36. So again, I can't say this is the right one, but every time a client comes with a project, what we do is we look at the nature of the project and we are able to say this and discuss with them and agree this is actually the quicker and the best solution, this is the cheaper and most financial viable project, and we're able to guide you. So we walk the journey with the client according to the need or what they're looking for. Thank you.
Okay, thank you for the opportunity once again to shed some light. He has commented on some. I will only emphasize what keeps us awake as government in this electricity supply industry is to ensure that every Ugandan has access to clean energy. What can you do to support us? Two areas for rural-based off-grids, investment in off-grids, solar home systems, the packages that are packed in a way that they speak to the low-income earners. Because you know you can put in infrastructure there and it becomes a white elephant, or the next time you'll see a riot and you have to run to government to finance to subsidize, because we don't want to issue an instrument and then the project is not financially sustainable because you have to pay back the debt to sustain this investment climate that we have created. So we are very, very careful on that. So in the rural space, off-grid solar home systems, and really we are so proud about the solar home systems. They have, without much regulation, without many policies, they have really moved even ahead of the grid connection. Then the other area which keeps us awake is reliability of supply. Indirectly, when you make power reliable, then those who have DGs, who have all other forms who are winning off the grid, those who are even planning to put up industries are able to operate efficiently, and you can then talk about industrial demand, industrialization of the country. So investments within the infrastructure to ensure that the electrons move from where they are generated to load centers to industrial base in a reliable manner. So those are two critical areas. What are the drivers of the cost of energy? I believe by cost you mean the tariff that you pay. Approximately 65% of this is the generation cost, no doubt. Then you have approximately 25% of that. I say approximately because it varies because of macroeconomic factors, but also the investment as they are commissioned by investors. Out of the 25% of the distribution segment, about half of that or slightly above is cost of investment. Then the other one is the OPEX and the loss factor. And then you have a 5% re-electrification levy, and then the remainder is what goes to the O&M for transmission, and the 0.3%, of ERA. The transmission segment is developed through government. The development cost is enormous, and it's best practice for all developing grids. Transmission lines are not picked through the end user. The cost of development and extension of the transmission lines. So that is the outlay. We have a very huge table which shows how these things change. You can check with us on our website. Then the other one is the question was feeding back into the grid. The offer is not attractive, and yet when you are buying from the grid, the cost is high. Yes, it is the reality, because when you buy power from the grid, you buy it from the distribution point. Remember, the 500 or so you are talking about, you know, is a composition of the 67 of the generator. It has the 25 of the transmission, the distribution investment, and the component of the loss factor, which, however perfect you are, these conductors to warm and heat and carry the signal of electricity, there is a loss that is imposed there. You have these big towers of transmission. They also have a minimal operation and maintenance, the generation levy, and then the sustainability of the 0.3 of the regulator. So when you are at this site and you are buying, you are actually buying from the distribution company, and therefore you are buying, if you are an extra large, the cost is different. There are various cost categories. You are the end user, domestic like meat is about 750 shillings. The cheapest is off-peak extra large, which is around 139 shillings at night. So now when you want to sell, you are now selling to the distribution company. You are selling to the distribution company. And remember, in these circumstances where we are, this distribution company has already left electrons in a level of 1 cent per kilowatt hour, because you have 1,252 megawatts of installed capacity. Your demand is only 723. All of these gymnastics will change as we continue to consume demand, to consume this power. We continue to accelerate access to clean energy, but also we continue to industrialize as the country. And we need to close the equation, because once the industrial park are put up, what we are looking at is productivity, and productivity is driven by market. That is why usually our head of state says we have to handle this, not only Ugandan, but the East African and the African market, and our ability to sell to the globe. The cost of electricity, but also the cost of conversion. So we are coming in with a pilot where we even do a study on efficient appliances, and we start with the institutions and big industries. We saw this problem about 5-10 years ago, that biomass is now getting depleted, and we are working and walking towards